Hello guys and welcome to Daily Market Movements. Welcome to another episode where today we're going to be analysing the NASDAQ 100 and talking about something very important. Over the past couple of weeks, you would have heard me come onto YouTube and state that I personally do not believe there's going to be 5 to 6 interest rate hikes, and that's pretty much the reason as to why we've seen a massive correction here in the NASDAQ 100. We're down 18.10%. The S&P 500 was down 10%, and the Dow was down 4.4% at the lows. And partially that's because we've had large banks such as Goldman Sachs, Bank of America, JP Morgan coming out saying that they anticipate that there's going to be 7, 6 or even 5 interest rate hikes this year, where the Fed actually hasn't really indicated that. Yes, we know that interest rates are going to be hiked as of March, so in 2 months' time. It's the 1st of February today, so next month, we know that, but the big question is how many rate hikes are we going to get? And my theory over the past couple of weeks is I personally think that the markets have overpriced how many interest rate hikes are going to occur in 2020. I see there being maximum 4 hikes, but personally I'm leaning more towards 3 hikes. I think the Fed's going to find it very difficult to hike 6, 7 times, and that's due to many political tensions currently circulating around the world at this moment in time, with regards to Russia, Ukraine. There's some tension here in the Middle East as well, and then as well as that, we've got COVID. But I've had a few of you message me and comment on my YouTube videos over the past couple of days saying, Max, could you please explain your theory as to why you think that there's only going to be 3? Because I don't think me just coming on here and saying, oh yeah, well there's tensions on the Ukraine border between Russia and Ukraine, so Powell's only going to hike 3 times. That isn't good enough. So I thought that this video would be a perfect opportunity for me to come on and explain a little bit more as to why I personally believe that there's going to be 3 rate hikes rather than 5, 6, or 7. First of all, I think it's very important to understand that the Fed, they have data that we can't see, that we don't have and probably won't ever have. They have key data points which they can analyze and try and predict the future. None of us have a crystal ball, including Jerome Powell, and that's very important to understand. But that being said, they have a lot more data than what we do. So at this moment in time, you've got all these banks and all these hedge fund managers and famous traders coming onto the likes of CNBC, Bloomberg, and stating how many interest rate hikes they believe the Fed is going to have. But the answer is the Fed doesn't even know. Okay, the Fed doesn't know. No one knows. And at this moment in time, it's just we're all just trying to make an educated guess to try and predict the future and to try and make some money from it. That being said, I personally, and this is not financial advice, I'm just coming onto YouTube and sharing my own opinion, but I personally think that the Fed is trying to avoid a massive recession, and I personally think that there is a way that this could happen due to deflation. So at this moment in time, inflation's up at a record high. It's up near 7%, and every news headline you're seeing inflation. Every earnings report that you're getting from large US companies, just like Apple last week and Microsoft, everyone's warning that inflation prices are making these companies lose lots of hundreds of millions of dollars, etc., and it's really straining their business models. But what is causing inflation? And the reason that we have inflation is because, of course, last year and in 2020 we had governments coming out and furloughing their citizens because they weren't able to work, paying their bills, giving them money. As well as that, you had businesses getting grants. I myself, we have a beauty salon and a barbershop back in the UK, and we got tens of thousands of pounds, and sometimes we didn't even ask for it, we were just given it. And it really was incredible. And I think for the first time ever, every single citizen in this world had money. Of course, poorer countries weren't as fortunate, but when I'm talking about the richer countries in the world, the US, the European countries, the UK, for example, Australia, their governments were furloughing their citizens. They were giving their business grants, and for the first time ever, the majority of people actually had a significant amount of money, which is fantastic. And of course, what do people do? People, they do what they do best. They go and consume. Everyone went out spending. If you had a laptop that was nearing its last days, and everyone went out and bought a brand new state-of-the-art MacBook Pro, for example, from Apple, or likewise with their iPhone. If they had an iPhone 8 or an iPhone 9, well, they probably went and upgraded and bought the brand new latest iPhone. And of course, this created an environment where the demand was a lot more larger than the actual supply. You know, these companies could not keep up, and I think that's what has caused inflation. And as well as that, we've had COVID, meaning that people couldn't work in their factories, etc. And of course, that has left many supply strains across the globe. But that being said, I wanted to show you an article that I found on CNBC. So what did people do when COVID first hit? So I found an article on March 11, 2020, and you know, there was that crazy phase where people were going out and they were panic buying. They were panic buying tissue. They were panic buying waters. You know, and the shops shelves were just literally left like this. There was all tin food because people genuinely thought the world was going to come to an end and that they'd have to find a shelter somewhere. It was ridiculous. People were literally fighting over toilet roll. So people went out and panic bought. And you know, this is being proved now from scientists that psychological. You know, this is something to do with how the human brain works, and unfortunately, psychologically, we are greedy people. You know, humans are proven to be greedy. We always want to look out for ourselves rather than others, and this is what led to panic buying. I myself didn't go panic buying tissue roll, but if there was like some zombie apocalypse, then I probably would have gone out and panic bought and been selfish. That's just me being truthful. But unfortunately, we all have it in us, and this also reflects on other things like investing and the business world. So that's just an article that I wanted to show you. And then on the other hand, you're also finding articles a few months ago. So this article was posted on November 2021, so about 2 months ago, and you've probably seen it all over many news channels at this moment in time. Ships keep on coming. There's a month backlog of ships currently waiting outside ports in Miami, Florida, San Francisco. You've got it in China as well, where ships are literally coming from China with all these goods. It is told, all these goods that people have ordered in the US, and they're just waiting to get offloaded. But at this moment in time, as I just mentioned, the supply just cannot keep up with the current demand, because people are ordering too much and there's just not enough to go around. So what does this lead to? This then leads to companies hiking their prices, because they're thinking, well, hang on a minute, normally this month we would expect to sell 1,000 bikes, but at this moment in time we've already had 3,000 online orders, so we only have 1,000 bikes in stock. What are they going to do? They're going to rise the prices, and people would probably still buy them, and that is what has caused us inflation. But I'm going to turn this story upside down, and it's gonna it'll probably make you think a little bit deeper with regards to this. The past couple of articles that I've just showed you. What if all these boats that are apparently waiting outside Miami and Florida and San Francisco, and they are, don't get me wrong, I'm not saying that they're not there, but what if these boats, rather than being full of iPhones and goods, what if they're actually full of materials? So let's say a shop would normally have to order 1,000 parts to create 500 bikes. Well, what if these shops have thought, well, hang on a minute, when I'm ordering my pieces of metal, pieces of plastic from China, and there's massive supply strains because of there's been a factory in China that's had to shut down because there's been an outbreak of COVID. Well, there's going to be problems later on down the line. So what if, rather than us buying 1,000 parts, why don't we buy 3,000 parts, and then we can then create 1,500 bikes, and we don't have to worry? What if it's all these shops that have actually gone out and panic bought themselves? Because as I mentioned, this is all in us. This is all in human beings. It's how our brain works. We are greedy. And many factories might have thought, well, to give us an edge over our competitors, why don't we go and panic buy and buy excess amount of stock so that we can then create these goods? And then of course now we're getting to that phase where the majority of people have actually already spent most of their grant money, most of their furlough money. It's there is a stat out there that shows us that at this moment in time, money saved in US bank accounts is nowhere near where it was back in March or May 2020. So people have they've already spent money. Of course, Christmas would have wiped a lot of us out. Bills are starting to go through the roof. So consumers are having less and less money because of as I just mentioned, oil prices, just little things like that. Inflation is making the cost of living so much higher. But what if all these companies have now gone out and bought excess stock, and once these boats do eventually dock and offload. What if all these companies have gone and panic bought, and then it switches? The supply is now outpacing the actual demand. Well, then that's going to cause something called deflation, and I think that's why the Fed are being so patient at this moment in time to see, because they obviously have data that we can't see, and I think that it could be something to do with this. What if there was deflation and we was in a interest rate environment where the likes of Bank of America, as they've stated over the past couple of days, is that they think that there's going to be 7 interest rate hikes this year. What if we actually did genuinely hike 7 times and then we had this massive phase of deflation? That would be terrible for the US economy, and that would probably cause a recession. So that could be a massive catalyst for stocks to really start to fall hard, because it's the big growth stocks as well that would get really damaged if there was deflation and they were having to cut their prices, etc. So what I'm trying to say here, I know I've been talking for quite a long time during this video, but I'm just trying to explain my theory as to why I think the Fed is being so patient and why I personally believe they will not hike 5, 6, 7 times. I think there is a massive risk of deflation. You're seeing many analysts come onto the likes of CNBC saying, no, inflation's not going to naturally come down, but they don't know, okay? I don't know. Their guess is as good as mine, but I think that the Fed has data that they don't have, I don't have, and we just have to try and make our best educated guess. And I think it personally makes more sense to be patient. I really do. I think anything could happen. We've still got a global pandemic going on. Apparently there's a new variant out at the moment in the US. It's not as deadly as others, but I think it's like a strain from the Omicron variant. But there could be another variant tomorrow. Who's to say that that couldn't happen, and it could be a lot more deadly? So I think that the Fed having a more patient approach is the right one, and I think that the markets are starting to come around to that now. But I think this leaves room for a massive rally going into spring. Come March, if we get Jerome Powell come out and he does strike a more dovish tone, and if inflation does start to cool off, I think this week we've got some more inflation data, then I think that could really start to rally these markets up towards those all-time highs. And just to speak from a technical perspective, we have just pretty much gone and achieved our take profit up at 15,000. So I just want to take this opportunity to say a massive well done to everyone who is part of our Signal team. Don't forget, if you want to become part of our Signal team, then you can go over on our website at dailymarketmovements.com and join. But well done to everyone who got involved in that trade. We've now hit 15,000, and we've just triggered a new buy signal as well, which is over on our private Telegram group chat. So for those who are involved in that, in our signal group, you will know what trade to place. I'm not going to mention it here on YouTube because you'd have to subscribe, as it'd be very unfair on those who have already paid to be part of our team. But it was a fantastic trade. We cherry picked it on the bottom pretty much on that Monday when I said I was going out shopping. I made that clear on YouTube and on my streaming service. We bought down at 14,150. We'll take profit up at 15,000, and we've gained 6% whilst only risking 3.66%. So a good risk reward ratio, where we had our stop loss just below the swing lows on Monday. And then of course yesterday I said if we can break above last week's swing highs, we should see a very quick move up towards a 200-day EMA, and that's exactly what has happened. And we had a very strong finish going into the close yesterday, where the NASDAQ100 was up around 3.2% at the close. So really, really good trading conditions at this moment in time. But the big question is this just a dead cat bounce, or do we genuinely go higher? And I think that answer is all about the 200-day EMA. If you can get a daily close above the 200-day EMA, that's very, very positive. Again, I think you go straight towards the 50-day EMA at 15,400. But I would not be surprised to see the NASDAQ 100 break down here. I think that's perfectly fine. We're just going to be digesting the gains, and you might just wait for our next catalyst that will then eventually send us higher. So if we do start to fall from here and we go back down towards 15,600, 15,500, I wouldn't panic at all. I think it's actually normal. In fact, I did actually find on the chart, I think it was back in 2016, I found something very interesting. It's actually very similar to how we are trading now. It's where we had a double bottom, so it was the exact same time period. If I just zoom out a little bit, here we go. So I think this is what happened here in 2016. Of course, we had a low, so we fell. I think we fell on total around 20%, so it was considered to be a correction here in the NASDAQ 100, pretty much the same amount that we've fallen here. But on the 20th of January, we did have that low, and that candlestick was very similar to the one that we had on Monday, where there was a lot of panic selling and then of course we actually ended up high, and then we actually had a nice rally from that low. If we see how much we rallied, 8%, and that's currently where the NASDAQ 100 is at this moment in time. And just as we were approaching the 50 to 200-day EMA, we actually then broke down one leg lower. We pierced just below that previous low that we then created, but then of course that then marked the bottom, and then that's where the market recovered all the way to the highs that was then. And of course that took place over quite a long time period, about 69 days, so 2.5 months. So the question is this just another, are we going to get a double bottom? Is this going to be a repeat of what happened in 2016, or was it just a one-time bottom, and now we go back towards those all-time highs, just like we did here for instance back in November 2020? The answer is I don't know. I'm taking it day by day, but the previous 2 trading sessions have just been fantastic, and I am very bullish in NASDAQ 100, and I have bought. And even if the market did go a little bit lower, I'd probably buy some more. So very, very bullish here for NASDAQ 100. I thought I'd just come on here today and just explain my theory as to why I personally believe the Fed is only going to hike 3 times, and that's because I think they're being very cautious because they're seeing data that we aren't, and I still believe there's still a massive risk that there could be deflation. And the last thing you want is a hiking interest rate environment whilst you've got deflation going on. And that is going to wrap it up for today's video. But just before I let you leave, I just want to quickly show you our brand new streaming service. We've recently launched this website that you can see in front of you. This is where we provide in-depth analysis videos as well as trading signals via our Telegram group chat. Once subscribed, you'll then have access to all of our in-depth analysis videos as well as access to our private Telegram group chat. We cover various markets such as commodities, US stocks, indices, and cryptocurrencies. We also have a video category where we provide educational content so that you can improve your trading skills. If this sounds appealing to you, then you can find our website link in the description of this YouTube video at dailymarketmovements.com. If not, then I would just like to take this time to say thank you for watching today's YouTube video. Please give my channel a subscribe and give this video a thumbs up. Thank you very much, and I hope to see you again soon.